Hello guys, welcome back to another video. So we are going to look at market structure, and then I'm going to show you a case study on GBP AUD and show you a simple trade setup that you should have taken. Sorry to disturb you guys in the video. Funded Next is offering the best challenges in the prop firm space, starting from two-step challenge, step 1 challenge, and they Stellar Light. They start from 6k up to 200k in funding capital, and then they are very affordable. Using the link in the description below, you can also get yourself an account for free. Just use the link in the description below, purchase an account, drop a comment, and then by the end of the week I'll be giving away a 5k or a 10k account depending on how many comments I will get in this video here. See you on the flip side. So as you can see here, the market was pushing to the upside. So this is our low, this is our high, this is our higher low, and then this is your higher high. Whenever you have your higher high, it means that we have a break of structure within this area here, just like that. Then after having a break of structure, what you need to use is your Fibonacci tool from the low to the high. Then you can clearly notice that the market went deep into the discount area. That's where you can nicely buy the market into new areas of interest. So around this point, this should be your area of interest, of which is your demand zone or your order block. So after tapping into this area, the market pushed to the upside, giving you what, a break of structure, just because we break previous highs and we protect previous lows, guys. So just like that, we have a new break of structure, which means you take your Fib tool from the low to the high. Just like that, you have an area of interest at that area of interest, just like this, guys. So this type of like analysis whereby you need to understand market structure has to be done on the 4-hour. Your entries should be on the 15-minute time frame. So let's say maybe we remove this thing. Now we have that tap, the market pushed up, breaking this previous high, just like that. Now we have a large trading area, guys. As you can see from this point, this is your high that has to be taken out, or the target, and then this is your protected low, just like that. Now you expect the internal market structure to pull down into an area of interest. So you take your Fib tool from the low to the high, then you can clearly see that you expect the market to just go below this area here. Let me just remove that, to just go below this area here. And then what will happen is that you'll get internal structure, internal lower lows and lower highs, up until we tap into an area of interest, just like this. Then after tapping into that area of interest, what will happen is that you get a change of character. Then that is when the market will push up internally, breaking that previous high, just like that, guys. So that is what you need to understand when it comes to market structure. And then if you didn't understand, make sure that you drop a comment in the comment section, guys. So now we are on the 4-hour on GBP AUD, and then as you can see here, the structure was pushing to the upside. You can clearly see that by looking at the overall market structure, guys. So let's just focus on the current one so that I don't waste your time. So as you can see from this point here, we had a break of structure just around this point, just like that. And I like to use like the 3-candle pullback rule. As you can see here, we pulled up, pullback wasn't that good, then we pulled up, and then we had a nice pullback, tapping into an area of interest here. So this was also a break of structure, just like that. And we had another one, of which it's this one here, and you can see that the market was pushing up very nicely. Then we had this as our high, then we had this as our protected low, of which that was nice up until the market tapped into an area of interest around here. Didn't react nicely, we had a change of character, of which that may happen whenever you're trading. It's part of trading, guys. So change of character right here. Then now we have your new high, then you have your lower low, of which it's this one here. Then after that, what you expect is selling opportunities. Then you can take your Fib tool from the high to the low. Then you clearly notice that we tapped into that golden zone, of which is the 0.5, just around there, and then we sold off. Then the market started pushing back up, of which we had a new directional bias, just because the previous higher was broken. So low, lower high, then higher low, then we had a higher high coming up. So if you look at the structure, you'll see that we had this as our overall change of character, just like that. Change of character right there. Then if you zoom in, you'll see that the 3 candle pullback happened around this point. So after the pullback, the market created a new higher high. So this was your high and this was your low. This was your lowest point, of which it's this one here. Just like that. Then we didn't get like that deep pullback whereby the market has to reach like an area of interest, just because most of the time we expect maybe the market to react to this area here. Let's say we drop from here to here, then that is when we can decide if we buy or not, guys. But like in this case, that did not happen. What had happened is that we had a new break of structure, which is this one here, just like this. Then if you look at the pullback, you can obviously see that this was not like a sufficient 3 candle pullback, whereby the pullback happened around this area here. So that was our pullback right there, and pulling back into an area of interest, of which it's this one here. Let me just change the color for the supply area. Then as you can see, now the market is in a new trend whereby we are looking for buying opportunities. So the swing high, as you can see here, we had some type of a liquidity sweep around this point here. Let me turn this on so that I can cater for these areas correctly, guys. Now, so just like that, we had the sweep. Then after having the sweep, that is when we had a break of structure with a big body candle, as you can see right there. So this is a break of structure right there. Then this is your new swing low. Then this is your new swing high right there, guys. So the previous structures do not matter. You're just focusing on this low here and then focusing on this high here. Then as you can see, what had happened is what, guys? We can take a fib tool from the low to the high, and you can clearly see that the market tapped into that golden zone very nicely, of which it's this one here around here. Then we started pulling to the upside, as you can see, nicely pulled up, and then we tapped into that area of interest or the take profit. Then we had another break of structure, just like that. You need to map out like your structure. As you can see right there, we had a pullback, of which this is your new low, this is your new higher high right there, guys. So from that point, we can take like a fib tool from the low to the high, just like that. Just like that. Sorry guys, I was just making sure that I'm recording. So just like that, we have your swing low, then you have your higher high right there. The market tapped into an area of interest, which is around maybe this point here, just because we have a fair value gap just around that point. So now we have a new break, which is this one here. Then after even that break of structure, guys, it means that this is your swing low, this one here, this is your swing low, and then we are determining the swing high right now. So as you can see here, we didn't have like that sufficient 3 candle pullback around this point. We had it around here, but like we're just going to use this high point, of which is that one right there, guys. So that is our swing high. So the market is still in an uptrend. There is no way that you can be looking for selling opportunities. So taking a fib tool from the low to the high, you can clearly notice that this is our overall trading range. But like the market went a bit deeper into this area here, just because there are like some areas of value, and then there is also like some liquidity areas around this point here. But like it doesn't matter, just because we're focusing on the structure at the moment. So here we have this as our lowest point, just like that. Then we can switch over to the 15-minute time frame for our entry criteria, guys. So we can just switch over to the 15 so that you can see if like there are like areas that needed to be like filled up, just because there is like imbalances in the market. Do not forget that, guys. So if we zoom in, you can closely see that this is like a last area of interest. Then we had like slightly equal lows around here. Like I said, like there is a lot that you need to understand when it comes to the markets. Then we had a fair value gap right there. So let me just change the color for this thing here, just because it's like an area of interest. It's not like a fair value gap, guys. So zooming in, you can clearly see that the market tapped into this area here. So now we are just focusing on what the current market structure, of which is this one here. So as you can see, from this point we had a low, lower high, then this is your lower low here. So now we are waiting for what? A change of character, which happened around this point. Then after having that charge, you can clearly see that this was some type of an inducement. Then this was your area of interest, of which it's this one here. Then the market tapped into it and then started buying very nicely. So if you should have taken like this trade here, where they buy stops just below this area here, 270, let's just say 250 for just this video here, 25 pips, then the target should be around this point here for around 8%, guys. Now, so that 8%, we just going to leave it. Then we have a new break of structure, which is this one here, and you can just scale in. That is if you want to scale in. So it means that this is your new low, then this is your highest point right there. So now you'll be looking for entries on the lower time frame, of which it's this one here. Né? So from the low to the high, you can clearly see that the market tapped into the golden zone, pulled up nicely, then pulled back again. Maybe we can just zoom in and see if there was like an area of interest. So as you can see right here, this was the last area of interest around here, of which it's big, guys, to be honest. And whenever it's big like this, you have to cater for it like completely. So as you can see right there, then your stop loss should be just below the area. So you take your longs around here, stops should be just below this area or below the low, just like that, for around like 50 something pips. Let's just say 55 pips, just because whenever you're using like tight stops, you're not going to enjoy trading, just because you'll get tagged out like each and every time. So let's say you have like a 6% trade here, then you have your second trade at around 16%, guys. Now, so you can do the math. You can already see like on only like 2 trades you can make like a lot of bank when it comes to this trading concept here. And yeah, guys, I'll see you on another video. Peace and love.